Wall Street firms are beginning to show confidence the pandemic's end in sight. For example, JP Morgan Chase apparently plans to host summer interns at its New York and London offices. Of course, that could change if there's a rise in COVID cases. The internship program was all remote last year. And beyond Wall Street, the latest survey from Manpower found nearly 8 in 10 employers expect hiring to return to pre-pandemic levels. Manpower's chief executive, Jonas, Prising, is with me. Now, this is interesting, but let's get under that number. When you say return to pre-pandemic levels, this is from a low base. So what are they expecting? Are they going on a hiring spree?
Well, I think what the survey clearly says is that the hiring outlook, Richard, is much brighter today than it was, say, just 7 or 8 months ago. When we asked the same question in June, only 50% of the employers said that they could imagine coming back to the pre-pandemic hiring levels. And this most recent survey we did showed that the hiring levels that they anticipate is much, much higher. And that's consistent with other surveys as well. And I know yesterday you had Bob from PwC on talking about the latest PwC CO survey. And we see the same level of optimism that he described yesterday in terms of the hiring outlook going forward from lots of employers.
But what does this mean in reality? So let's take Bob. Bob's CEOs are very confident, and your CEOs are planning to hire more. Now, does that mean we have an unemployment rate in the United States, and one assumes it'll be similar elsewhere, that will slowly reduce to where we were pre-pandemic? And will those employees go to an office, work from home, bit of both?
Well, so I think if we take the question first around, the labor market recovery, clearly we're seeing the U.S. recovering very, very quickly. And you saw that in the latest labor market report just a week or so ago. And we would expect the level of employment improvement increase quite substantially now in the U.S. over the next 4 to 5 months, because by now you're going to start to see the hiring pick up in the sectors that were the worst hit during the pandemic. For Europe, it's a question that, the employment levels there actually never dropped that far because you have such extensive furlough schemes. But also there, once we get over the vaccination issues and we get up to speed on the momentum of vaccinations and the issues you talked about in the earlier segments, we expect the hiring also to pick up quite substantially in Europe. Okay, as it relates to what they're coming back to, most employers expect their workforce to come back to the office.
So can I just jump in? Can I just I just wanted to follow that line of thought. How much do you think there was permanent loss of business? How many businesses that went out, jobs that have gone, jobs that are not coming back? Because the picture that you are painting is one of furloughs, it's one of layoffs, but as things came back, so employment has restored.
And that is what employers are saying in the sectors and the industries that are carrying on and are sort of coming back in the way that they can see and foresee. But there are, of course, sectors such as the travel industry, the hospitality industry, where there could be structural changes, where individuals aren't traveling as much for business anymore, whether they're choosing to travel less to certain destinations. That could have a permanent structural impact on the growth of employment. But overall, we would expect that most sectors are going to come back and come back strongly. Now, they won't be back to the prior levels, the pre-pandemic levels before the end of the year, but I think there's a good chance that over the next 12 to 18 months, both in the US and in Europe, we will see the recovery being very, very robust in both Europe and in North America, and frankly also across Asia Pacific and Latin America.
Sir, thank you. We'll talk as the year moves on. We'll have you back, of course, frequently to help us understand. I appreciate it. Thank you.